what Knox Vaults are and why users are better off using vaults.
Sweet, I can think now. Awesome. So Knox Vaults is a structured product for selling and buying options. We allow users to either participate in a call vault, so a covered call vault, or a put selling vault. The cycle for these is a 7-day cycle for the expiries. Users, we've seen, I think, 50 ETH in the call vault selling calls this past week, and then a little under 100K in the put vault selling put options. This is the whole goal of this was to be able to create a consistent way for users to earn yields, who are the LPs, so the people that deposit in the pool, and for buyers of options to be able to buy options in a larger bulk size. It's been really, really great for the first 2 weeks. We had a little hiccup on the first week, but we got that fixed with the subgraph stuff. But it was nothing to the users' funds. But that was a great battle testing moment for the vaults. And then this past week, we were able to see our first really competitive auction of the call options that are being sold, as well as the puts. And I think my back of the napkin math, we haven't displayed all of the APRs yet. Just wanted to get a couple more weeks under our belt. But the last week was looking at 15% for the call vault, and I believe 12% for the put vault. So that's just yields that people are earning off the premium that they're getting paid for their
Let's stop right there
options.
real quick, because while we're going through and we keep saying vaults, we're talking about vaults. What exactly are the vaults, and how do they work? Break down what these vaults are doing on Premia.
All right. I'll just stick to the covered calls because that's the easiest one. So each week, users are able to deposit ETH as collateral into our vaults or our pools, and we take that ETH and then we decide on a option that's usually at a standard delta of 20. For simplicity, it just means there's a 20% chance that option can expire in the money. There's an 80% chance it does not. That's like dumbing it way down, but that's the simple moment there. And then we, on Friday, calculate what that option contract would be. It has an expiry of 7 days. It usually is very far out of the money. And then we sell those at auction, in a Dutch auction at Friday, I think at 11 a.m. EST. The users are earning, who are depositing their ETH into that covered call vault, they earn a yield based on the premium, so how much we are able to sell those contracts for. And that's given back to them at the end of the 7-day cycle, just normal like how you would underwrite an option right now. The whole goal of, as I said before, of being able to create these vaults or these ways to sell options in a more systematic manner, so you have a more sustainable or predictable yield for users who are wanting to underwrite. And then for people that are wanting to buy options in bulk, they're able to buy in bulk and have a set price rather than a fluctuating price as we see in the current premium model with how the pool and the C value works. I think that's a good place to stop. If you want to go a little deeper, I'm happy to go deeper on anything there.
No, I'm just wanted to cover that part real quick. And I stopped you previously at a good time because that kind of leads into the next question we had from a user was if you could explain how Knox Vaults is providing sustainable and predictable yield. And you started going into the yield right before I stopped to go through the vaults. So does it have to do with the auction process, or what are some reasons this yield mechanism might be preferable to an LP?
Sweet. So let's start with where we break that down. Sustainable and predictable. So each week, that people that are depositing into the Knox Vault, to the covered call strategy, was the covered call strategy. They are able to know that their assets will be utilized that week. They'll underwrite options that'll be sold. They'll earn a yield based on the premium. Whereas in the current format of Premia, V2, you aren't sure when your assets will be used. There's a queue system, so you don't know if you're earning when you're earning any premiums on the assets you're putting in there. So that's the first big change up. It's each week you're going to be selling / underwriting options for a given week and earning a premium or yield. That's the way we create sustainability as well as predictability. The auction process is just part of the way we sell the options that you're underwriting. It's easier to sell options in bulk size this way. So you have one flat rate price that's determined by the Dutch auction, where we set the max price, so where the auction would start at, and then it starts to tick down over time. And it's been pretty competitive now with market rates. I don't have the numbers off the top of my head, but it's getting closer and closer to what the market value is each week. And then uh, I think the last part of that question was, what are some of the, I think you said, what are some of the reasons for the yield mechanism
Might be
might be
preferable
preferable
to
to
an
L?
LP.
Cool. So this yield mechanism, it might, for LPs, the biggest thing is capital utilization. Instead of having idle capital, you know that your capital will be utilized each week. That's a really big thing for people that are looking to uh, track their yields on a consistent basis. Instead of having to wait around for big paydays or sporadic moments of having their capital utilized in the V2 model of Premia.
Okay, so while we're kind of on the topic of options in V2, can you help understand why someone would want to buy an option that is so far out of the money?
That's a lot of different reasons for that. You can be playing volatility, so you might want to buy a few options and create kind of a straddle or a strangle. You also might be hedging in case of different swings in direction, where you either sold some amount of ETH or you bought some amount of ETH and you want to set a minimum price that you're going to be losing in your trade, or winning in this case in your trade sometimes. Additionally, there's fun ways you can do arbitrage. Now there's a pretty diverse ecosystem of options platforms that are budding either in DeFi as well as traditional platforms, centralized, not traditional, centralized platforms like Deribits. So there's a lot of different strategies you can put to work. I'm, no financial advice. We always know that. But yeah, there's definitely, we've seen trading desks that are buying the options right now for to play either to have hedging on various chains with their ETH, as well as if they're making different decisions on like wanting to sell or buy, given the market conditions. Actually, it's been pretty funny talking to a couple market makers or like high net worth individuals that they're just using it to create volatility plays. So everything is trying to play the volatility that we're experiencing right now, which is pretty aggressive if you've been watching the /realized volatility over the past like month or so. So yeah.
With some of these talks that you've been having lately, there seems to be interest in Knox. So, a question we had from our very fluffy bear: how is Knox different, or what are some benefits to Knox Vaults from other option products that exist in the space and offer similar strategies?
Okay, yeah. So the coolest part about Knox is it's really the fact that we use the vault standard. So this is a technical moment, and I'll start with the technical, and then we'll go to like how does that really matter for people. So the ERC 4626 standard is a vault standard for ERC 20 tokens, and it allows us to start to one, integrate with other platforms. So that the biggest thing is being able to increase your capital efficiency for underwriting. So that's on the LP side. And that's something that's starting to slowly happen right now. And it also, if you look a little bit further, it is really important for our Premia V3 to have these capabilities as well. So there'll be a vault layer in Premia V3. It'll be ERC 4626 as well. And setting like the groundwork for increasing capital utilization is super, super, super duper important. And so like that's the first part about what is cool about Knox Vaults. Now, when you say, what does that mean to you, a user non-technically? It means that one, it's one of the reasons that we're able to provide instant liquidity. So you can start to exit or unwind a position whenever you want to. That's partly because of Premia's protocol setup, and that's partly because of how we've set up the vaults. So that's a huge difference between our structured product system, our DOVs, versus other DeFi option vaults that are out there. The other part of that is you're able to, the way we set up some of the Dutch auction, there's a max price, so where the Dutch auction will start at a minimum price. So basically, users who are LPing can't sell their options for into a very low. When you're selling options into very low volatility markets, it controls like how cheap the option will actually be. So that's another big thing, and you can all see that on chain slash it's visual on the actual auction page of what the lowest price can be for the options. And I'd probably say the last thing is just going into capital efficiency a little bit deeper is saying integrations with lending platforms. It makes it a lot easier for them to be able to track the assets as you're earning more or potentially losing if there's an exercisable event. Places like Dolomite, Silo Finance, they're able to actually integrate and be able to allow users to use Vault tokens, so Knox Vaults, covered call tokens, or Knox Vaults put selling tokens as collateral, and you can take out a loan in USDC or ETH or something like that. That's something we've been working on pretty heavily right now, and hoping to have that finalized so everyone can start using that. I actually have a question, I guess for Froggy, but it's not on the list of things we're talking about. But with the Vaults layer, this is like a V3 question. With the Vaults layer, what are you most excited about being able for the users to be able to use?
Good question. I mean, there's so many different avenues to go down here. Um, I think I'm most excited about the ability for users to permissionlessly create their own vault strategies and test
Mm-hmm.
them out, and then have the ability for those to be integrated into the main platform over time if they prove successful. This is very similar to what we've seen in the past with urine vault strategies. Specifically, if anyone's familiar with the ape.tax website, that was where all of the community urine strategies were tested and proved out before being added to an official urine vault. And so I think seeing this sort of system being added to Premia should allow the community for opportunities to, build strategies that they've been looking for, and benefit from that when they get usage through performance fees, very similar to urine strategies. So I think that's one of the things that excites me the most. And then in tandem with that is just seeing all of the new types of strategies that both are built in-house at Premia and are
Mm-hmm.
built by the community. I know that we've in-house got a range of strategies that we are planning to build over the next 6 months to a year. We're going to obviously launch with some strategies when V3 launches, but there's just so many in our plans, some more complex than others. And I'm very excited to be able to kind of bring these out to the community progressively over time, and get their feedback and see what kind of strategies really DeFi is looking for at large. There's yield strategies, there's hedging strategies, market making strategies, arbitrage. There's a wide range, and so quite excited to see them in action and to see kind of how this plays out over the next year or so.
Well, while you have your speaker cap on, I had a few questions from the community actually, specifically around vaults. So I'll throw them at you. Um, they're wanting to know if we plan to release different types of volatility trading strategies, or if we're already thinking in that direction, such as like Condor,
Mm-hmm.
Butterfly, or if we plan to offer theta vault strategies, and kind of when we're looking at those being released after the V3 launch.
Yeah. Um, so the first one was about volatility trading. So on launch of V3, we will have a vault that trades volatility. But we also have multiple in-house that we are planning to launch over the next year. Um, some market making, which trade volatility on both sides. Some that run a specific strategy, for example, selling volatility only and trying to sell above the realized. Um, and then something like a credit spread, which could be turned into an iron condor if you double up the credit spread on both sides. So, long story short, yes, those are planned to be added to the platform. It's just a matter of time to build it, test it, simulate it, make sure that we've got the right strategy and that people are going to be happy with what's released, and then getting it out there. But of course, kind of the what I when I mentioned the community strategies earlier, if there's ever a strategy that we're not building or it's taking us too long to build, we're actually excited to see the community put those into practice and see kind of what strategies work and what don't, even the ones that we're not thinking of, etc.
I think the one that's on everyone's mind because it's been such a buzzword is delta neutral vaults. Do we plan to launch those? Close to launch or shortly after? Is that something that we're thinking about? As well as, do we plan to release some easy risk management things in what bull bear ratio we want to deposit, like something similar to what the smart deposit was going to be with an 80-20 put call ratio, or something more neutral like 60-40?
Yeah, those are great suggestions. As far as delta neutral, yes, it's something that we've been planning, researching for a long time now. I would say probably over a year. But there are multiple reasons why we haven't put it into production in V2, and it's not going to launch with V3, but it is probably the next vault to launch after V3 goes live. Or if not the next, it will be one of the first vaults to launch after V3 goes live.
Yeah, delta neutral is a fun game. It's a very hard thing to do, as we've seen with
It's
everyone
very
trying to.
complex, especially on chain, especially when there's liquidity lacking. Um, and in order for it to be efficient enough to be effective, you realistically need margin. And so one of the reasons that we are delaying the launch of that vault is margin will be something that's added a little bit after launch, after we've proved the base layers, etc. We're doing a little bit of an incremental launch so that we can kind of prove each layer, get usage of it before testing the next add-on feature, right? And so in this case, once margin has been proven and we've gotten a significant amount of liquidity to actually facilitate these delta hedging strategies, then it will make sense to actually launch one of these vaults and start proving it out in production.
Awesome. Moving back towards Knox Vaults specifically, Caesar, as we as Premia has kind of a plethora of markets to choose from, what are some of the assets or markets you're thinking about in regards to next vaults or next assets supported?
Well, it's kind of a double. That's a hard question to answer because there's a lot going on right now, as we all know. But we have looking at the other major, so BTC, so calls for WBTC and puts for WBTC, two vaults for that. There's some fun ones that we've been talking to with in different chains, whether it be Optimism, so OP token, as well as the elusive Matic, so Wrapped Matic or just Wrap Stake Matic. That kind of stuff is super fun to start to look at vaults, and there's we're still assessing kind of the demand for it. I know Optimism has a pretty strong demand for the token, especially as it's seen its crazy price action right now. Excuse me. But those are kind of the vaults that we would love to see and love to build. We're also in this cool pattern where we're waiting to probably launch a few of those on the V3, which will give us some more options on what we can do. And but yeah, those are the ones I'm really excited about. There's also the elusive GLP GMX vaults that we will one day figure out how to do due to all that the data issues. But man, those are the fun ones. Those are definitely fun ones. Oh man, someone's having the alarm go off.
Yeah, I don't know if you heard that. Oh crap. So last thing on future plans to go in the vaults, and then we'll dive back into the current vaults. But as we kind of look forward, and Froggy, maybe you can give a little bit of insight on this. Do we plan to have this functionality across all networks like Optimism, or do we plan to just stay on Arbitrum for the time being?
You're talking about Knox Vaults?
Features of Premia, including vaults, I'm sorry, Premia vaults, but including Knox Vaults.
Yeah. So I guess then we'll give a two-part answer. Part one is Knox Vaults on V2. It's currently on Arbitrum. We're kind of assessing demand to see if it makes sense to launch it anywhere else. Most likely not, because most of our focus is on V3. But as Caesar mentioned, if we did get a surge of demand from something like the optimism community or something, then there is the opportunity to, for example, launch optimism auctions or something like that. So it's a potential, but I think realistically, where most of the demand from the community is right now is V3, and so that's where all of our focus is on. And then that leads into kind of V3 vaults, which will launch on Arbitrum. And then as far as where do we go after that? Um, We'll likely stay on Arbitrum as our liquidity silo for some time after the release of V3 to prevent liquidity fragmentation across chains. There will already be liquidity fragmentation across options, pools, etc. So we want to maintain as little of that as possible, and so to do that, we'll stay on one chain. Over time, as liquidity grows and there's demand from other chains, we'll kind of assess what makes more sense. We're looking at omni-chain right now to see if it doesn't make sense to allow users to trade options from other chains or deposit withdraw from other chains. But that's kind of more of a long-term plan, not something that's going to launch with V3. So to reiterate, V3 will launch on Arbitrum. The vaults will be on Arbitrum. And until further notice, that's the plan.
Speaking of all these chains and kind of the risks and trade-offs, I think this is a good bridge into the risks and security-based questions that we had gotten sent in. So just focusing on Knox, Caesar, what type of security have we provided for the investor? Are there audits that have been done by on the Knox Vault contracts? Or
Too many audits.
Bug bounties? Give us the down there.
I got you. Too many audits. We had one very large audit, and we had some smaller ones, all done by Sherlock and the teams they work with. Sherlock is different from Code 4 Arena, but similar in the fact that you get hooked up with a team of auditors and you work with them throughout the process. And so we've worked with the same auditors for probably 4 or 5 months now. So it was really, really good experience with them. So that's the first part. The check. We've done the security audit on the contracts. We have a few things in place, like I said earlier, about how we're pricing the options to make sure that there is like a floor for the option price or the auction price, so the clearing price of the auction, to make sure that users are still getting a competitive price. So that's the other part there. Counterparty risk is minimal. All the options that are being underwritten are they're 1-to-1 ratio, so they're always going to have collateral available, whether that is in our pool or Premia's greater pools. That's so when you want to exercise, since it's American option, you can do that whenever you like. So that's pretty low. Actually, zero in my opinion. Let me see any other risks that are involved. No, I think those are the main ones that we're really concerned about. We took a lot of time and thought a process around just like a lot of edge cases. So there's a few things that we've done to make sure that that when the options are being underwritten, so the actual process, the technical transaction of underwriting those options, we have some safeguards around that as well to make sure that there is no I guess gamification of how you're being able to sell options back to the pool / purchase options from the Premia pool to kind of arb that in a malicious way. But yeah, those are the main things we're really focused on. That's like why it took us so long to launch, is because we wanted to make sure it was super secure.
Talk about that a bit. Like, what are some of the risk management measures that have been implemented in the development of the vaults?
For the how we do the actual underwriting of the options,
Yeah.
or oh, okay. So after auction is over, so the clearing price has been set. It's now time to actually give everyone out their contracts or the right to own their contracts. We have a 24-hour waiting period for the buyers of the options, to be able to actually claim their contracts. This is done so that they don't manipulate make trades basically with price manipulation. So they're not selling back their options to the pool immediately because of pricing differentiation. And then this also means that users who are in the vault right then can't leave the vault for that 24-hour period as well. So it's making sure that both parties are still available to be able to not manipulate anything with pricing of premium options. That's the simple way of explaining it. So we did that. I mentioned also he mentioned the same thing about the minimum price fee or minimum price of the Dutch auction, which is very important. So make sure that you get somewhat a competitive yield, even if the prices are go to the lowest clearing price. So,
Are there any liquidation risks using any of the Knox strategy vaults right now?
not yet. No, there will never Knox Vaults / I don't think any of our at least the initial vaults that come out with V3 as well. Correct me if I'm wrong on this, Froggy. But there shouldn't be any liquidation risks because Premia natively will not have margin enabled. What is a potential liquidation risk is if there is integrations with third parties. So I mentioned Sila, I mentioned Dolomite. There's been a few others we've been talking to about integrating the vault tokens as collateral. You have liquidation risk like a normal lending platform, so like Aave or Compound kind of liquidation risk. That is not our responsibility at that point. That is you deciding to lever up on your position on your own. So that's where liquidation might come into play, but that's not something that happens natively on Premia's protocol.
You briefly covered this in the beginning when we were going over some of the features, but just to kind of clarify this part, can someone withdraw from a vault at any time? Since we're on the topic of liquidation risks and people may see, spot price of an asset doing something crazy like ETH today, and they want to get out. How do we allow that in Knox?
Yeah, so after that 24-hour holding period, you can exit your position anytime. So if an LP is like, I need cash now, even if the market's fine, they're able to reassign their contract just like they would any other contract on the Premia V2 pools, and they're able to exit that position, whether it be the P&L is in a profit or a loss. If it's in a loss, they have to pay a little bit, but to exit that, but you can exit at any time. You lose the right to your premium for that week, though. For that epoch, you lose the right to premium if you exit early. So that's the one downside of instant liquidity.
Now, it's kind of a perfect question given just current market again, but one of the questions was, they read that the vaults aim to have a delta of 20, and how can this be the same value if the underlying token changes? If there's volatility that's different amongst all of these different tokens.
So I wish we could take a standard delta of 20 at every given second of the day, but so we take I don't know the time off the top of my head actually right now. Sorry, but on Thursday midday, we take a snapshot and we calculate using the implied volatility. We calculate what the standard delta of 20 would be at that given moment, and then we use that strike price going into the next epoch. You can see that I think right now, actually, if you go to auctions.premia.finance, you can see the strike price that's been calculated already for the day for the incoming auction. But yeah, we calculated that given time, and that's a prediction that's going to basically last the whole week at that point, that we're expecting over the next 7 days. The probability of that option will have a 20% chance of expiring the money. That's kind of how I think about it. As the prices shift and fluctuate, that's where it starts to come into play, where you may want to exit your position. If you're a trader, you may want to take some hedge out and by buying said options or buying just the spot asset, just up to you. But that's kind of the way we think about it and the way how the standard delta is decided.
Pretty sure it's 24 hours before the auction starts on Friday, so it's like 8 a.m.
Yes.
UTC on Thursday.
Thank you. I didn't want to do the wrong UTC time and tell people the wrong stuff, so thank you.
Yeah, and then as I think there's one risk that wasn't mentioned earlier, or if it was, I just didn't hear it, which is the risk of the volatility surface. So there's like two risks there, which is one, if the volatility surface was wildly off at the time that the delta is chosen, then the vol could end up selling something that's super deep out of the money, further than 20 delta, or closer to in the money than they want. That's not really a huge risk because the option would still be priced according to that volatility surface. So if it was wildly outpriced, then that price would still be the minimum and maximum for the auction. And so as bids come in, it would still be probably accurately priced. The other risk is that the volatility surface is providing invalid volatility quotes. Over the past year and almost a half that we've had Premia V2 running, we haven't had reports of this happen. So it's, knock on wood, it's not something that we're wildly concerned about, but it is a risk that people should know, that the volatility surface volatilities that are provided do provide the minimum and maximum price for the auction. And so if that were to be not working or something like that, then the volatility auction prices could be off.
Thank you for that clarification for me. Definitely did not mention that.
The frog. Okay.
The chance
this
of it
question,
happening is near zero, but just needs to be mentioned.
this user had a question about how the pricing works for the vaults. And what you want to know is whether the depositors can set a floor price for the premium before the auction starts. Or
go ahead.
go ahead. You can.
I was going to say, no, the simple answer is just no, you can't depositors can't set a floor price. The thing that you can do as a depositor, if you're not happy with the price or the premium you're earning that week, is you can, at that instant with liquidity, you can exit the vaults at that week and take your capital back. Is the statement I would say to you, say to a user in that case.
Yep, that was the follow up of their question. If they could just withdraw the assets if the desired threshold wasn't met. How is the minimum prize in the Dutch auction determined?
So that's like a secret sauce moment. But the maximum price is what we believe the market rate is for the auction of the standard delta of 20th of the auction starting. So I think last week it was the strike price was 1900. And when the auction started at 8 a.m. UTC, I don't think that's actually right. But anyways, when the auction started, we calculated using the implied volatility at the given time and Black-Scholes the price for the maximum. The offset price is calculated to make sure that we don't sell things at too low of a price. It's like, I don't feel it's like giving away too much of the secret sauce at that point for users, but it's the whole purpose is to make sure that the LPs are made able to have the best rates, basically. So.
I can put it pretty simply. It's like basically you take an option on the volatility surface that should be less expensive than the option being sold. You take an option on the volatility surface that should be more expensive than the option being sold. Those are your min and max prices, and then you'll let the market find the price in between.
Talking about pricing, how are we optimizing Knox Vaults so that users are getting the, I don't want to say most profit, but getting the best expected return that they can?
Competition. So us finding more and more market makers or more and more buyers on the buy side to compete for the best price to be purchased at. So each week, when we have more and more people bidding, so unique bidders is a good week for option or for vault participants. It means that there's more people trying to buy the options. It means that more people are trying to get a fair price, and they're okay with taking a little bit less as long as they can get their fill. It's basically the way I think about it. So the more unique buyers you have, the more competition you have, the higher the price will start to be at that point for the vault participants. So the clearing price will keep going up in that case.
For the current vault users, when will the vault performance and either past return or expected return be visible to them? When will we have data on like fees earned and stats kind of behind the launch?
We wanted to get 4 epochs in, but it's clear that everyone wants to know what's going on much quicker, and they haven't been calculating it. It's more effort to calculate themselves than they like. So we're probably turning that on. We'll be turning that on very soon here, so you can see this past week's epochs APR, and then the projected APR going into the next week. So hopefully have that up in the next 48 hours or so.
Sweet. We're coming up to the end of the pre-AMA submitted questions. Last one before I think my favorite one on here is options and vaults can be a bit confusing. Are there any videos or easy to follow explainers on how Knox Vaults works?
I think Wicca has made a couple videos, but KB or Wicca can link those at some point, and we can share those out. But we have a few videos for how Knox works for both the LP and the buy side, so people participating in the auction as well.
Sweet. And the last question that we got sent in was, what are you most proud of with the release of Knox Vaults, and what are the most important benefits of the vaults, in your opinion?
I'm proud we got it out, and it works, and it's so far so good. Knock on wood, it's been safe for users to use, and they've earned a pretty good yield so far. And then I don't know what the second part was, but basically, I'm very excited about the fact that a lot of the infrastructure that we've created will be used in V3, and a lot of the groundwork we've laid with some of the other third-party integrations will also be used in V3. That's kind of the biggest thing I'm excited about, or proud of.
I'm excited for it kind of laying the groundwork, the substrate for all the vaults to come. It's cool to see it finally, come to fruition.
For real, yeah. It's been a long road. It's been a long road.
Sweet. That's all the pre-AMA questions that were submitted. We'll kind of open it up now to anyone in the on the call. If you want to come up and ask a question, you can just raise your hand.
I feel like now's the time for the music again, like waiting music. Yes.
We are no strangers to love.
All right. If you got no
Shit.
questions, I want to take the time to thank you all for dropping in, joining us today. Looking forward to more vaults, more assets, V3 coming out. If you have any questions, join us in Discord, drop them in there. Enjoy the rest of your week.